Over the past year, I've made over $200,000 from trading. But the truth is, if I knew back then when I got started, all of the things that I know now, I could have made much more, much faster. And I would have hit six figures in no time. So in this video, I'm going to give you the exact 3-step blueprint that you can follow to get to $10,000 per month trading without hundreds of thousands of dollars in starting capital and as a complete beginner. We're going to go over the number one reason why most people fail and can't stop blowing accounts and how to avoid it using my exact risk management protocol. And then we're going to talk about the simple yet overlooked strategy to get funded multiple hundreds of thousands of dollars in no time at all. And finally, I'm going to reveal the exact trading strategy that I would use to get to $10,000 per month. And this ties everything together. So stick around to make sure that you understand exactly how I trade. You see, over the years, I've seen countless traders come and go. Some of them struggled for years without making any progress and then called it quits, while others have gone on to achieve massive results and make hundreds of thousands of dollars. What makes it interesting though is that it's not the smartest or the most experienced traders that make it. In fact, there's one common skill among all of those who made it. You've probably heard the famous quote, "It's not the most intellectual or the strongest of the species that survive, but the most adaptable." Well, in trading, this couldn't be more true, because the one common skill that I noticed among all traders that made it was the fact that they all mastered risk management. Now, we're going to talk about how you can earn literally upwards of $10,000 per month consistently, because remember, trading is not a consistent thing. Some months are going to be red months. You're going to have dry months. Okay. That's normal. It doesn't mean you're doing anything wrong. Okay. But how can we risk manage in a way that allows us to earn significantly and consistently? Okay. Month in and month out, because like I said, dry months is a real thing. You can still earn with trading? Yes, you can. So yeah, I'm making upwards of 45K per month trading. And this was a 30-day period that I had recently, okay? And if you think that it was just a once-off thing, this was one that I did literally like a week ago. Literally like a week ago, I did 19K from Effexify, okay? Which is one of my preferred prop firms. Okay, so what will you learn in this video? You're going to learn how to get funded in less than a month and stay under 5% drawdown. Okay, seriously, you can do it, right? Especially when it comes to using the beauty of prop firm accounts. All right, then you're going to learn how I earn 45K per month, even though we have losing streaks, because losing streaks is a part of trading. It's normal. People think that losing streaks mean that I need to change something about my trading or I need to switch trading strategies. You're also going to learn my exact step-by-step NASDAQ 45-minute per day trading strategy, okay? Literally takes 45 minutes per day. So let's get right into how to get funded in less than a month and stay under 5% drawdown, okay? And it's totally possible using the dynamic risk protocol. Now, our dynamic risk protocol is essentially just changing risk, okay, based on where you're at in that account. So for example, if I am starting a fresh account, I'm going to use 1% risk, okay, when I'm at 0%, okay. Now, if I go up 1%, another percent, and eventually I'm at 3%, once I hit 3%, this is where the dynamic risk starts to come into play. I'm then able to risk more than 1%. So you can risk 2% once you're at 3% risk. And what this allows you to do is pass extremely quickly, because when you're at 3 or 4%, so for example, let's say you've won 2 trades now, and with our strategy, it's a 1 to 2 risk reward. So you would be at roughly 4%. You would then be able to risk 2% of that and get to 8%, okay? That's very, very important to note. And once you're at 8%, that means you've passed majority of prop firm accounts, okay? But at the same time, what this allows you to do is also minimize your downside potential for drawdown. Because when you go into more than 3% drawdown, you're going to halve your risk, okay, until you get back up above 3%, minus 3% drawdown, okay? So it's a sliding scale of risk. I highly recommend that you take a screenshot of this, because this changed the way that I pass prop firm and funded challenge accounts. Very important that you take note of this, because it allows you to pass in half the time, but also delay the amount of drawdown that you go into, reduce it significantly. The reason I'm able to consistently do this month in and month out is because of my diversification protocol. And what that essentially means is that we want to have multiple accounts. Right now, I've got about 5 different prop firm accounts that I'm managing, okay? And the beauty of that is that if you've got 4 or 5 accounts, you can diversify risk, which just basically means split your risk between those accounts. And the way that we do this is by not taking the same trade across all of your accounts. Because what will happen in that case is that when you hit those bad months and losing streaks, you're going to put all of your accounts into significant drawdown, okay? And then you're going to spend the next month or 2 months trying to dig your way out of that drawdown, okay? So really, it's very important that using this method, you take different trades on different days on different accounts. Because what that allows you to do is to spread your risk, okay? And when it comes into those losing streaks, instead of having 4%, going into a 4% drawdown because you're in a 4 losing streak across all accounts, you're going to be splitting that, and you're going to be only -1 here, -1 here, -1 here, and -1 here. Now, if that doesn't make sense, let me explain it a bit further. Essentially, what you're going to be doing is the following. Let's say we've got 4 funded accounts, and we've used the dynamic risk management protocol to then get you those accounts, okay? We've used the sliding scale. We've gotten funded a lot quicker. We've now got 4 accounts. And again, you're going to want to go for smaller accounts in the beginning, because what people do is they go for a huge funded account that they save up for months and months and months to buy. They buy the biggest one they can get. They buy a 200K the first time, instead of buying 4 50K accounts, okay? Or instead of 100K, buy 4 25K accounts. And when you get them funded, you can then diversify your risk across them, which allows you to do the following. So what you do is you take 1 trade on Monday here, okay? And then I'm done for the day, okay? With the strategy that I trade, we only take 1 trade a day. You take 1 trade on Monday, then you move on to Tuesday. So let's say Monday's trade's a loss. We move on to Tuesday, okay? Tuesday, bad day as well. Also take a loss. Okay, this week's not looking good, but let's go on to the next day. On Wednesday, we take another trade. We take another loss. It's a really bad week for us. But guess what? If we were taking the same trade across all accounts, we would be in 3% drawdown right now. We're only in 1% drawdown. Then on Thursday, we take another trade and we finally hit the winning trade. And because it's a 1-to-2 risk reward ratio, we're now up 2% over here, okay? And let's just say for mathematics sake, this is a 100K account. That is $2,000. And then the beauty of the system is we only want to get 1 to 2% of profit per account, okay? And it sounds like a little, but when you've got 1 to 2% across all these accounts and you're able to withdraw on a bi-weekly, sometimes weekly basis with these prop firms, it adds up real quick, and you can scale this real quick, okay? So essentially what I'm doing is when I get to 2% on this account, I'm taking this and I'm putting it aside, okay? I'm taking this account and I'm putting it aside, and I'm not touching it until I withdraw. We wait for payday on that account, okay? And eventually we then get the account reset and we can trade it again. Okay, so not only do we have this account locked in for payout, okay, which by the way does amazing things for your psychology, we also, okay, have an account that's going to be reset and be fresh to trade the next month, which can earn us more, okay? So think about what that does for your psychology. You've put that aside, you're definitely getting paid at least $2,000. Like, it's absolutely insane. And then we come back to these accounts, which are in drawdown again, and we again split our trades across them. And what you'll eventually have is a situation, and on a lot of months this happens, by the way, you'll be surprised, but we have all of these accounts secured with 1 to 2% profit in them, okay? And if these are 100K accounts, well, okay, let's say there's 1%, 1%, 2%, 2%, okay? We've now got 4 and 2. That's 6% on 100K accounts. That's $6,000 that you've banked. But you've also done it relatively stress-free because you've had accounts set aside. You've had accounts set aside and you're banking profits. So it's kind of like that game show, Who Wants to Be a Millionaire? You've got a safety net in place. So whatever you do on the next question or next trade, you're not going to lose that money. You're going to go home with something. Okay. Very, very, very valuable. This is extremely valuable. And that's how, with one of the most up and down professions in the world that has dry months, okay, you can actually lock in profits and get paid out every single month. This is how you do it, okay? So essentially, if we go on to the actual strategy, okay, that we use to implement in this, again, guys, I'm showing you everything here, okay? This is the golden goose that lays the golden egg right here. So we're now going to talk about my 45-minute per day strategy, the actual strategy that we use to implement with these risk management techniques to get funded and then every single month take some money from the market, okay? So it's on the NASDAQ, okay? We use the 4-hour to identify key zones. That's step 1. Step 2, we identify the 5-minute range at New York Open, okay? Then step 3 is we observe the 50 simple moving average and we wait for a break and closure outside of that range that we identified. And then for step 4, we're going to enter on the retest and hesitation with a 1 to 2 risk reward ratio. And then we're going to go break even at 1 to 1. So let me show you a trade that we took the other day. We took this trade inside of Crown Club, which you can join for free. The link is down below. And we trade every single day live at New York Stock Exchange Open. I take all of my trades live in front of you guys. And we've recorded it for the last 6 months, okay? We've got 6 months worth of results, right? And it's all free. You guys can join there and watch me trade live every single day with my team, okay? So the step 1 is to identify the 4-hour key zone. So here we've identified the 4-hour key zone. We've got this zone here and this zone down here. You can clearly see the market's bounced off of here on the 4-hour a lot of times. Now with the 4-hour, you can be a little bit more loose with this. So this zone up here could also have been up here, okay? That's also totally fine. We use this to establish a direction and to understand the limits with which we can trade within, okay? And so essentially how it works, and by the way, this is with bar replay. So this candle would have been the full 4-hour printed at the time of New York Open. Price was around here in the middle. And so what that means is we can take trades going up and take trades going down, selling into these zones, okay? So if we were down here, we could not take sells into this brick wall, okay? And if similarly, if price was up here, we could not take buys into this brick wall. I'll explain exactly how that works. You'll be able to see it on the lower time frames now. So this is where you can see it. So price is in the middle, okay? It's in the middle. This is the 4-hour zones that we just saw, okay? So this is these 4-hour zones here, is this here and this here. Okay, and as you can see, we're in the middle of these two zones. Okay, we're in the middle of them, which means that we can buy or we can sell. Okay, if for example we were all the way up here, we would not want to be buying into this solid brick wall, and if we were down here, we would not be wanting to sell into this solid brick wall. All right, so that's a very important thing to note. Okay, and what we do now is identify the 5-minute range at New York Open. So this is New York Open. Here's the 5-minute, the exterior, a limit of this 5-minute range, and here's the bottom. Okay, so essentially what we're looking for is for price to break out to either one of these sides. Now, price breaks out of the range quite aggressively, okay? And price is also below the 50 SMA. So you're gonna wanna put a 50 SMA on your chart, okay? And as you can see, the 50 SMA is starting to curve down a little bit. We've also got price closing. It must break, not just break, but close, okay? If it breaks, okay, and then wicks and closes back inside the zone, no trade, okay? It needs to break and close outside, okay? And then essentially price broke, closed. I went down to the 1 minute now just to show you how it looks. But when price got back to that zone, we waited for price to hesitate and start rejecting. And then we got in as price started pushing down, we got in, and then we went break even at 1-to-1 risk reward ratio, okay? And price hit take profit at 1-to-2 risk reward. Now, that's the whole thing. Like I said, the duck that lays the golden egg, okay? That is literally the entire system from A to Z, okay? How we get funded, how we can manage those funds to make sure that we consistently get paid out even when we have losing streaks, and then the strategy that we actually use to trade and tie all of that together. So that's it for today, guys. Again, if you want to trade live with me every single day where I've taken trades for the last 6 months and recorded all of the results, you can join with the link in the description down below. Cheers, everyone. I'll see you in the next video.